What are the top 3 ways to trade a small Forex account so that you can eventually trade a bigger account and then eventually earn more profits? Coming up next. So when you're trading a small account, what you need to do is to trade small because you only have so much margin for you to use and to work on. So what I'm talking about when you're trading small is to risk 1 to 2% of your capital. And very likely when you're starting out with a small account, you're still at the beginner stage, so I don't recommend risking anything more than 2%. So when you're starting off with a small account, what you can do is to use it to train yourself on how to manage losses. Especially if you are just starting out from going from demo to a real life account. When you have money on the line, that's when you learn how to manage your losses properly. Because the problem with a lot of beginner traders is that when they start off with a small account and when they earn profits by risking 1 to 2%, they see only a few dollars, $1, $2, $3, then they're like, this is way too little. So what most traders do is that they'll over leverage, use all their margin, and that's how most of their account get blown because they find that the amount they earn is too small. Who can survive on $10 profit a month? So when you're trading with a small account, it's very important not to focus on the money. Way too many people just look at money, that's why they over leverage, they feel that's not enough. But if you think in terms of, again, percentage, pips and points, if you really think about it, let's say 1 month you're earning $10. But if you calculate in terms of percentage, you're earning, let's say, 10% a year. If you're earning 10% a year, it means that you're way ahead, you're in the top 10% of profitable traders. You're way ahead of most traders who lose money, who have a negative ROI. So if you focus on the money, it's just going to make you really, really discouraged. But if you focus on the percentage returns, you realize that you're more profitable than other traders who just lose money. And also, if you haven't watched my video on how to achieve a neutral state, one of the ways is to focus on the numbers, not on the money. Because when you focus on the money, that's when it's going to mess around with your trading psychology. You start to trade based on fear, you're scared or you're greedy, just based on emotions. Tip number 2. You use your small Forex trading account as a way to test your broker's credibility. Now, what do I mean by that? So a lot of beginners, they assume that if they can make money in the demo account, then they can make money in the live account. And then once they go from demo and then go to live, and then they realize that they're not making money, then they're like, what the shit? If you choose the wrong type of broker, what's going to happen is that your broker is going to make sure or try their best to make sure that you make money in a demo account to entice you to open a live account. So in order to do that, you're going to make sure that you're not going to hit your stop loss in your demo account, and you're going to hit your TP target more often in your demo account to give you the illusion to thinking that, oh, you're a profitable trader. That's why you will rush to go into a live account. So that's why a lot of traders find that they're profitable in a demo account, but they're not profitable in a live account. And here's the thing, if you choose the wrong type of broker, let's say you choose a broker that's a market maker, that's not regulated, that just comes out of nowhere and then just markets to you, and then you're like, oh, okay, this is a good broker. So when you start with that broker who has a conflict of interest, this means that whenever you lose money, then they'll make money. So in order for them to make as much money as possible, they will make sure that you lose as often and as much as possible. So what's going to happen is that whenever you have an open trade, you have a stop loss right there, the market maker or the broker is going to drag the price all the way to a stop loss, and then you will get stopped out very, very often. So in order for you to determine whether your broker is credible or not, aside from all the factors that you need to consider, you also need to test them out with a live account. And that's why I don't recommend traders to only open one trading account with one broker, because it only gives you this illusion, this bubble, and you can't compare results. What you need to do is to open multiple trading accounts with different brokers. Open two charts, compare the price movements of these two brokers. If you see a spike in one chart and there's no spike in another chart, then it means that this broker is playing some games with you. If you and your friend has the exact same level of stop loss, but you get stopped out and your friend doesn't get stopped out, also your broker is playing games with you. So you need to be careful on that. Tip number, assuming that you have a strategy that works, that's why you went from demo account to live account. Assuming that you have tested it, proven it, right now you want to trade and make money in a live account, alright? The other method to trade a small account is to use it to train how good is your trading psychology. Because here's the thing, another reason why a lot of traders make money in a demo account and don't make money in a live account is because when your hard-earned money is not on the line, it's very easy to make money. But when you put your hard-earned money on a live account and then you start to trade and then you see the market movements, everything, it's going to play around with your psychology. You're going to start to feel emotions. You realize that when you trade with a demo account, you don't feel much things. The only feeling that you feel when you're trading a demo account is you're just freaking bored. If you haven't watched the video on mastering trading psychology, then you need to watch it now. I'll put the link down in the description below, and also in the info card that's going to appear anytime around this video. And a lot of times you realize that when you trade a demo account, you tend to trade rationally. But when you start to go into live account, do things like TP early, cut losses late, And in order to determine whether your psychology is on point is to record down all your demo trades, live trades in a trading journal. Compare your trading results on your demo account and your live account to determine whether it is the broker issue, your strategy issue, or is it because it's your psychology issue. And the good thing about a small trading account is that it allows you to train your psychology for trading bigger and bigger accounts. So use this as a stepping stone, a first step for you to trade live accounts. So a small trading account is not so much for you to get rich quick or quit your job and then travel around the world. A small Forex trading account is better used to train yourself and to test things out. Use your small trading account as a training ground rather than a get rich quick account, rather than a quit your job account, rather than a financial freedom account. Then yet again, it's still possible to grow a small account to a massive big account. So I'm going to talk more about on how to grow and how to raise capital for your trading account in the next video. So as long as you are still subscribed, then I'll share that with you in the next few videos. Alright, share with me in the comment section down below, what is your experience with a small trading account and how did it help you in your trading? So that I'm careful, and I'll talk to you in the next episode. Bye.